Okay, let's dive into this explainer. You know, when most of us hear the word auditor, we immediately picture someone just buried under a mountain of paper receipts, right? But the reality of our modern financial system requires an entirely different approach. After all, these are the folks literally making sure the companies holding your investments and retirement funds aren't cooking the books. So today, we're going to explore how modern auditors act a lot more like financial detectives, constantly adapting to sniff out hidden errors in a super complex digital world.
Which brings us to a really fascinating question. How do you actually find a hidden error in millions of lines of code? This kind of hits the nail on the head for our central challenge today. We're not just looking for a misplaced decimal point on a coffee-stained physical invoice anymore. We're looking at how the whole concept of auditing has to adapt when paper trails completely disappear into these massive digital networks. I mean, how do we trust the numbers when the systems generating them are invisible to the naked eye, sometimes processing millions of transactions a second?
Well, to answer that, here is our roadmap for today. We'll start with responding to audit risks, then look at the automated IT environment. From there, we'll cover testing controls and procedures, move on to leveraging data analytics, and finally wrap up with adapting for smaller entities. All right, moving right into Section 1, Responding to Audit Risks, the foundation.
So the PCAOB, that's the board that oversees these audits, explicitly mandates something called professional skepticism. And what that really means is maintaining a constantly questioning mind and critically assessing absolutely every piece of audit evidence. Auditors literally cannot afford to just take management's word for it or blindly trust a computer's output at face value. They have to actively corroborate everything. We're talking third-party confirmations, independent documents, or even pulling in outside specialists. Basically, they have to prove it.
Think of auditing kind of like securing a massive bank vault. You really have two main procedures here. First, you have your tests of controls. This is testing the system's defenses. It's checking if the vault actually locks properly or if only the authorized people have the combination. On the flip side, you have substantive procedures. This is the auditor actually walking in and counting the physical cash inside that vault to make sure it matches the bank's ledger. You absolutely 100% need both of these to be totally confident that the money is safe.
And based on the specific risks they find, auditors will scale their efforts by adjusting what we call the nature, timing, and extent of their procedures. It's pretty straightforward. If the risk of fraud goes up, the auditor has to dig deeper. So this might mean changing the nature of the test to something much more reliable. Or maybe shifting the timing, like showing up completely unannounced right at year-end. Or they might crank up the extent of the audit by testing a massive sample size of data instead of just glancing at a few files.
Let's keep moving.
Section 2, the automated IT environment, the digital shift. So now we're looking at the modern digital crime scene, information systems. When a business environment completely shifts so that all its core operations, accounting, and even decision-making are run by computers, the auditor's response has to completely change too. In fact, the PCAOB standards point out that when crucial financial information is only available electronically, it might actually be literally impossible to design effective manual tests without first testing and trusting those underlying IT controls.
Now, automation is absolutely a double-edged sword. On one hand, yes, it processes huge volumes of data with pinpoint accuracy, it integrates operations seamlessly, and it practically wipes out manual human error, which is amazing for business efficiency, right? But for an auditor, well, these exact same features introduce entirely new layers of digital risk that have to be meticulously investigated.
To handle this, the CA Institute lays out a really structured approach for this whole digital landscape. You kick things off by assessing the risk, figuring out exactly where the misstatements could be hiding. Then, you really have to understand and document the business processes. Next, you test the actual operating effectiveness of those system controls. And finally, you evaluate any weak spots or deficiencies for your final reporting.
Which brings us to Section 3, Testing Controls and Procedures, Gathering Evidence.
So what are we actually testing for out there? Well, think about nightmare scenarios like unauthorized back-end data changes or someone quietly granting themselves excessive super user access. To an auditor, these are major red flags. If these IT-specific risks aren't locked down, the auditor simply cannot trust any of the system's data. And here's the kicker. If you can't trust the machine, your manual, substantive audit work has to increase exponentially just to get a baseline level of assurance. It's a huge deal.
To actually lock down these risks, we have to split things into general IT controls and application controls. General controls are the big picture overarching security policies. Think of this like who is actually allowed to physically scan their badge to get into the main server room. Application controls, on the other hand, are highly specific. This is like your accounting software automatically blocking a user from saving a journal entry if the debits and credits don't balance out.
When it comes to gathering this evidence, auditors will mix and match their methods. But here is a real pro tip from the field. Inquiry alone is never, ever enough. You can't just ask a system admin, hey, is access secure, and check a box. No way. But if you apply inquiry in combination with inspection, so you ask the admin and then you pull the raw system logs to prove they were telling the truth, that's when you get the most bulletproof and efficient audit evidence possible.
All right, let's look at the tech side of things. Section 4, Leveraging Data Analytics, the Auditor's Toolkit.
If a company's financial system is fully automated, the auditor needs to be automated too. Enter CATs, Computer-Assisted Auditing Techniques. Gone are the days where you'd sit there and manually test a tiny little sample of 50 paper invoices. Now, CATs allow modern auditors to basically unleash sophisticated algorithms that can analyze the entire massive population of electronic data in a matter of seconds.
I mean, this technology is a total game changer. By leveraging data analytics, auditors can instantly recompute super complex depreciation schedules across, say, 10,000 assets. They can automatically flag high-risk samples and analyze millions, literally millions of journal entries specifically hunting for those tiny hidden anomalies that point straight to fraud. It's incredibly powerful stuff.
Okay, moving to our final topic. Section 5, Adapting for Smaller Entities. Scalable Frameworks.
You know, there's this really common misconception that complex control tests and data analytics are only for massive tech giants. But the International Federation of Accountants, or IFAC, makes it really clear that this risk-based audit approach is not just for Wall Street. It's actually a universal framework designed to scale up or scale way down.
The core concepts here: assessing risks, testing internal controls, hunting down material misstatements, these apply equally to a small mom-and-pop operation as they do to a medium-sized enterprise. Now, a smaller company might achieve its security totally differently, maybe just through direct, hands-on owner oversight rather than fancy software controls. But the auditor's fundamental job? Evaluating whether that security actually works, that remains exactly the same.
Ultimately, whether you are dealing with a local small business or a massive multinational IT network, the PCAOB requires one final, absolutely critical tool in the auditor's toolkit: the element of unpredictability. The modern detective literally has to keep management guessing, changing the timing of procedures, deciding to test completely unusual accounts, or just showing up unannounced. That's what keeps the whole process rigorous. And honestly, it is absolutely essential for catching fraud.
Which leaves us with a really fascinating thought to wrap up this explainer. We've seen how auditing has evolved from mountains of paper to millions of lines of code, and how auditors adopted data analytics just to keep pace. But as our financial systems become increasingly driven by completely autonomous artificial intelligence, how will the auditor's playbook change next? The modern detective is going to have to invent entirely new ways to find the truth.